Good evening, ladies and gentlemen. This is Clueless Day Trading Frank. It's approximately 9:11 p.m. on January 6, 2019, on an extremely cold evening here on the New Jersey, New York waterfront, overlooking the lovely Statue of Liberty. God bless the United States of America. I'm grateful for everything, and it's just absolutely a beautiful sight on nights like this. Full disclosure, this live webinar, weekend strategic updates, setting up my members and other free trial subscribers, and anyone else who's listening will be listening to this particular broadcast, videocast, on the Clueless Day Trading YouTube channel. These sessions are designed to prepare you for the coming week. And despite all the intense volatility and everything that happens, these sessions are designed to keep you mentally calibrated. In other words, you need to stay disciplined on the tactical approach, make as much money as possible, and then move on, just the way it is. So, on that note, let us begin. I'm going to ask a quick question before I start, and I want my good friend Jack, my good friend and loyal member MB, and my very good friend Mike to answer. This is part of the behavioral game theory that is part of my modeling when I'm doing my charts and putting in my assumptions and forecasts of what might happen. Now, Jack might already know the answer because he is a very dedicated private advanced coaching session student who's picking up on stuff real fast, and I'm really proud of that. So even if I can help a single person to make money in these extreme volatile markets, then that is a testament to the fact that I'm doing something right, which I always try to do every single day. So on that note, let me ask the question, and Jack, please recuse yourself from answering because you probably know the answer. We talked about it over the weekend. Is since the Christmas Eve massacre, which was Christmas Eve crash, and I'll take this chart off the table, on December 24th, where the markets ended down 625 points or so after being up earlier in the day. And it was a terrible, terrible event in the sense that the average American mom and pop who's getting prepared for Christmas, one of the most joyous and holiest holidays, to see such a devastation in U.S. financial markets, I'm sure didn't do too well for people thinking about their 401ks, their pension funds, and their overall holdings in the market. So saying all that, here's the question, and I'd like you guys to answer. And Jack, please recuse yourself because you probably know the answer. Since December 24th, the Christmas Eve crash, the manipulated attack on U.S. financial markets, as I've said in my previous webinars, how many days do you think that we have had down days between that and this particular and last Friday? So between December 24th and last Friday, which was January 4th, how many down days do you think we have had when it comes to the Dow Jones Industrial Average in U.S. financial markets?
2, I think.
Okay, MB? Without looking it up, what's the first thing that comes to your mind? 3. Okay, so both of you are pretty close, actually, because I tried asking this question to a couple of our friends, one of our good friends' neighbors at his birthday party, and we stopped by in the afternoon to say hello to him. And believe it or not, that every single other investor, and these are very hardworking, professional people making a decent sum of money, living in nice neighborhoods, and they said, well, quite a few. Well, not true, because Mike is correct. 2. We have had 2 days. 2 days. And here is and I actually put that chart up for everyone and anyone who cared to look at my end of Friday charts. I think this is one of the most important behavioral charts that I've shown, aside from the very precise technical levels that I've shown, and every single one of them have been hit both on the long side and the short side. No one can contest that. Is that there have been, since the Christmas Eve crash, there have been only 2 red days. And those 2 red days were, this was the 26th, 27th, the 28th, and then the Apple, warning on their revenues, which was Thursday, right? Apple warning was Thursday. Trying to remember that, but some Wednesday or Thursday, I believe the Apple warning was, the Apple warning was Thursday, the 3rd. So there have been 2 red candles, and yet, if you think about it from a behavioral standpoint, the amount of money that that my traders, I don't know what exactly my traders are doing, but I think I read them well. Having been done this for a little bit more than 4 years, is that it just seems like every single day has been one bloody red day. Because that's how investors are, and traders, forget investors, traders are acting. That includes, in my opinion, I could be dead wrong, I hope I'm dead wrong, most of my members. Because the doom and gloom and the despair, because of all the negativity that's out there, which we have talked about extensively, because of all the volatility out there, which we cannot run away from, is so severe that every day just seems like a terrible day. Yet we have only had 2 single red days, and this was a sharp one. The Apple day was a rough one when Apple pre-announced the night before on Wednesday. But that is called behavioral game theory. When you go through a traumatic shock, as the markets have been overall, in between we have done pretty okay. We have managed to survive the whole calamitous 5,000 or 5,000 point drop on the Dow Jones Industrial Average and held that pretty well. We have done intraday shorts. We have made a killing on buying things on tactical dips and then making 30, 40, 50, 60, 100, 120, 200% sometimes on the opening gaps. Like they say, always sell gap up opens, which we have followed like a robot. But because of all that, the traders who are not trading off charts are just trading off prices or trading off their own emotions. And again, I'm not here to blame anybody, okay? The only person who can set blame is God, not me. I'm human. I'm simply stating the behavioral tendencies of investors and traders. So most traders, are specifically the retail emotional traders, 2 things are happening. And guys, what I'm talking about from my vantage point, because you're not talking to a kid, you're talking to a professional trader who is well advanced in his age. I'm 90 years old. Okay, I'm kidding. All right. I'm over 50. Okay, there you go. So I got enough experience under my belt. Trust me, both in business, in human life, and dealing with people. So the bottom line is that 2 things are happening. One, traders are not making any money or freaking out on every little 30 point, 40 point drop, not buying the tactical dips, losing money. Number 2, they are making money, but not what they should, because these type of extreme lows, you're getting a 200%, 1,600%. You think I'm kidding? I'm looking at my other screen. Could have a little bit of money on the ones expiring on Friday. Those were the SPY 250 calls. The 255 calls, which I talked about last week, the SPY 265 calls, expiring on Monday, were up 1,400%. The SPYs expiring on the 9th, which is next Wednesday, the 250 calls, which I did alert, were up 402%. Talking about the returns just from this Friday. Netflix, forget about it. It's up more than 1,200% or more since I said buy it. Don't need to hold on to that swing from day one. You could always buy, sell, roll over part of the profits into higher strikes as the price moves higher. That's standard procedure. If you buy the 240 calls, which I told people to buy on the SPYs all the way from the bottom, we actually started off with the 235s. Then as it moves above 235, as it's crossing over towards 240, then you obviously want to roll over and buy the higher strikes at a cheaper price. I mean, that's simple math. So what's happening, number two, is that traders are making money, but they are not making what they should. And if that doesn't really hit you like a ton of bricks and make you feel like crap, because it certainly makes me feel like crap when I let go of something and I know it's going to go towards that higher level despite intraday volatility, I do not feel good. And if you're not feeling that feeling, then there is something really wrong with you as a trader. Because if you're not capturing 60 to 80% of the body of the candles, or at least 40 to 60% of the body of each of these candles, then you're doing something extremely wrong. Because these type of opportunities, ladies and gentlemen, do not come every day. These, in some cases, are generational opportunities. So if you're sitting comfortably, maybe because you're too wealthy, you have trust funds and all kinds of good stuff. I don't. Okay? I'm just a hardworking capitalist. That's what I am. Okay? I don't get a welfare check. I don't rely on the government to save me. And if you're not feeling crappy about that, there is something behaviorally wrong from a trading perspective with some of you. If you think that taking a 20% profit when I am showing monstrous moves and candles are expanding tremendously and I'm doing it every single day on a 15-minute, 30-minute, 1-hour level and you're not taking advantage of it because you're too busy doing your own stuff, or just sitting around saying, okay, I'll get in there yet. The market's going to drop another 900%. And you're not seeing the power of what is going on, whether it be a pattern symmetry, whether it be the slow stochastics moving up, whether it be so many other things that I'm showing. And you think, okay, I'm going to come in because I'm too busy doing stuff, I'm too busy with my own family life right now, so I don't want to make money. Well, that I can't help you with that. But what I'm simply saying, and I'm trying to enhance this point and put it through in the strongest possible way, is that these type of opportunities don't come too often. So when they do come, please, and this, it happened back in February of 2018. After the massive crash at that time, February 9th, when the markets turned. And now it's happening as of December 26th, and you're sitting around doing not much or not doing anything. That is absolutely horrible for yourself, because I'm doing my job. Now, saying all that, the fact is that the opportunities are still there. Whether or not we're going to keep on getting 1,800 point rallies going forward, yeah, we're going to get them. But if you keep on repeating the same mistakes that you do because of your own behavioral tendencies, you will never, ever grow your account to a degree where you actually feel that you're doing something, that you're moving on to the next level. I hope I made that clear. Now, am I doing it to the fullest extent? No. Because after the traumatic events and back and forth and all the volatility and the great chart setups, and then the next morning you wake up and everything's topsy-turvy down, I am also being somewhat cautious. But that's okay, because I am still hitting pedal to the metal as needed during the day, prior to the overnight trades, the setups. And I hear from some very good traders who are not necessarily studying the charts and asking, well, whether or not they should be holding things overnight. Because it's always that feeling, oh my God, I'm going to wake up the next morning and it's just going to be a horrible thing because there's going to be a tweet and whatever. And I fully understand that. But if you have no positions on an overnight level, especially on a majorly uptrending market on a short and intermediate term basis, then you're doing something really, really wrong. And this is not the first time. It happens all the time. It happens all the time. You cannot let your trauma of what happened in the markets on a 5,000 drop affect what is going to happen or what is happening going forward. Like they say in the business, it's not where you're coming from when it comes to stocks, it's where you're going. That's all I got to say. On that note, It's time to wake up. I am not extremely bullish. I am tactically bullish. Things are getting overbought. And we're going to just go scan through a whole bunch of charts today, and you guys will see that. Only thing I'll tell you, and I'll stress this very strongly, if you're not a tactical chart trader, and especially this amazing, precise, through the most ugliest markets that I've shown, these tactical charts, both on the long side and the short side, every single specific level that's been hit. This is not magic. Forecasting these markets in these extreme volatility environments that was pretty much all of 2018 is almost a dauntless task. And I do it. I'm sure some of you follow other services and stuff. I would like somebody to tell me who else is doing it. I will lay down the challenge. Who else is guiding their members and their traders through the most difficult markets ever? Not just because things are falling apart as they were on the massive macro liquidation and saying, I told you so, the market's going to crash and burn. We have had some of those traders who never made a single money on the big money moves higher, but always took credit when something fell apart a bit. I'm not in that camp because I'm a true patriot. I believe in the glory of the United States of America. I do. And I believe that our financial markets are a national security risk. And if our financial markets completely fall around and collapse like most of those gurus and these bearish, hardcore bearish traders, not tactically bearish traders, some of them who have left our group, good for them. Go away. Okay? But being consistently dogmatically bearish means that you are not a patriot. I'm serious. That means you do not believe in the power of the American financial markets. You don't. I will lay down that challenge. I will also lay down the challenge is that through every single level that's been hit, every single pattern that's been shown, the amount of real-time engagement for active traders, the amount of real-time engagement for swing traders that I have produced every single day. And I have to say this because I have to wake many people up, is absolutely incredible. There has not been a single day that I've said, see you guys later. I'll see you guys in 2 days from now. They go, the market's just going to hell in a handbasket. No, I've walked you guys every single through. So it's high time, all of you, and that includes me too. We grow up, take responsibility, seize the moment, carpe diem, and make money. Because these opportunities are not going to come every single time. And if you're that shit scared every single morning because futures are down 30 points and you do not take trades off tactical levels when these candles are forming, we're up 2,000 plus points or more from the lows, yet I can assure you that very few made any real money. Because you guys are all waiting around for what? I have no frigging idea. Am I angry? Not at all. Why should I be angry? I'm not your daddy. You don't pay my bills. I don't pay your bills. I pay your bills by showing you how to make some really serious money. $1.40 calls on Netflix in one single overnight trade or the same day. Go to $8, $9. Square goes from $1.22 to $4.50. That's not real money. Those are 200, 300, 400% moves intraday. Now, if you're that scared that you can buy a little bit of that and make yourself some very decent money, or, doesn't matter what the size of your portfolio is. One call costs $140. $140 goes to 8. That's $800. You could have made $560. Sorry, $650. $660 in one contract. And you're telling me you can't do that? So what I'm saying for 2019, and that includes me, because what I speak, what I preach is what I practice. I'm disappointed in some of the trades that I've left early. I'm disappointed sometimes when I'm forced out of a position, despite my own charts telling me otherwise. And charts will never tell you what's going to happen. Did charts tell you what was going to happen between Thursday and Friday when we closed like this on the Apple trade? straight down. Yet did the stochastics buckle? Did the VIX, which I kept on showing with the red candle, repeatedly saying in simple English, why isn't the VIX showing a green candle spikes? Some of you took heed of that. Some of you actually said, whoa, he's asking questions. Look at the chart. He's right. That was the indication that the so-called real smart money, and believe me, there's some real smart money out there who pretty much know what's going to happen. Okay? They're connected. That's capitalism. It's all about connections. We ain't socialists. We ain't communists. All right? Capitalism means there's a lot of connections. So bottom line is that they knew. And the next morning, the market takes off and goes higher, 200, 300, 400, 500, goes above 800 points at one point. I thought we were going to hit almost up plus 1,000. But, so my thing is, these are amazing stuff that I'm delivering. Not because I'm a frigging genius. I'm a hard-working, faster messenger of the markets. I read markets better than 90% of people out there. Now, whether or not you people, ladies and gentlemen, take full advantage of my incisive forecasts and my predictions, not because of my opinions, because of my charts and the other stuff that I constantly, I mix in the macro news, political news coming out of DC, out of China and stuff, my thing, and run with it. That's your responsibility, not mine. So high time, guys, ran with it. Okay, stop being scared all the time, which most of you are. All right. And the last thing I'll say, my favorite term, United States of America wasn't built on fear. The United States of America was built on risk and grit. So that's our markets. And always remember one thing, what I just said a few minutes ago. The U.S. market's falling apart. Stocks down 30, 40%. U.S. markets down almost 20% is a real national security risk, not the other stuff that you hear. That's a real national security risk. Because when we economically falter, nations who want to hurt us, remember, the biggest pain is not a military war. The biggest hurt is when you economically falter. And in life too. Your biggest enemy who doesn't like you in life wants to see you suffer, wants you to lose everything. That's the same thing in U.S. financial markets. Capish? Like they say in New York, wake up time, all right? Stop always thinking over the doom and gloom and all the things that might go wrong. Start thinking a little bit about what might go right. So, on that note, a couple of broader points. We know what the risks are. The biggest risk right now is partly the government shutdown. It's going on and on. Whatever your political leanings are, the fact is the government has to reopen. No question about it. Once the IRS refunds don't go through, that's when the pain is going to be felt. And that's not going to help anybody. Okay? So that's number one. Number two, the China trade talks are beginning on the highest levels starting tomorrow. Can somebody mute their mic, please? Because I can hear a lot of background noise. So the China talks are starting tomorrow. There's going to be back and forth. So that is a risk. I don't think our boys are down in China to basically insult them. There is going to be diplomatic talk. I think the Trump administration is doing a pretty fantastic job on talking with the right levels in China. I think President Trump is hell-bent on having some sort of deal with China. It's politically important to him. And for China, it's very important to him. Economically, so that's number one. So that's the second thing that we are going to be going through starting tomorrow. Number three is what I talked about before, which is a major risk to the markets is U.S. companies, U.S. multinationals, what the corporations remember, more than 70% of S&P 500 companies or 60% profits come from overseas, China being one of the biggest markets. They start to warn, just the way FedEx did, just the way Apple did, we're screwed short term. Markets are going to, they start to warn really hard. You are going to, the markets are going to crap. So, okay, simple. And President Trump knows that very well. He does not need the markets crumbling on the third year of his presidency. right? Exactly. With election the next year, right? 2020. So bottom line is that that's a very dangerous thing. So aside from that, the other risk, which I forgot to mention the last time, is Brexit. What Theresa May and the British are doing. Brexit on its rawest form is going to crash global markets. Telling you right now. Okay, forget all the political stuff. Believe me, I know London, I know England very well. All right, so this in the form that it is right now, and believe me, 99.9%, 100% of Americans have absolutely no freaking clue what's happening with this Brexit crap. Oh, they want to leave the EU, because they use a bunch of bureaucrats, which they are. But they don't understand anything about what this Brexit thing is all about. But if Brexit happens the way it is, and the United Kingdom and England walk away from the EU, you're going to see a collapse in the financial banks overall, and it's not going to be good for anybody. Trade treaties and everything included. So what's going to happen? Some mom and pop sitting in Wisconsin, in Milwaukee, in South Dakota, people who have no idea where the hell, or where Brussels is or anything like that, They're just into the local stuff. Their pension funds, their bottom line is going to get hurt. So Brexit is a major risk to global markets and US financial markets. Do I think they could have a resolution? I think they can. Brexit in some sort of mediated form. There is a big vote coming up at the end of January or middle of January where the parliament's going to vote whether to do another referendum, whether Brexit should happen or not. Brexit, remember, B-R-E-X-I-T, Britain exit. So this is a major risk. The first things that will get hit are financial, Goldman Sachs, JP Morgan, blah, blah, blah. These global multinational banks. That's a major risk. Fed risk, I said it from day one, that this guy, Jerome Powell, is a good guy. He's a patriot. He understands. He comes from the private equity world. He understands how Wall Street works. He's a Fed governor. He's a nerd. He misspoke. He didn't know how to say it, and he took it back. His lieutenants took it back a couple of days after he said it. The real money knew it. I told you guys. So what did he do on Friday on the interview? He basically said he's flexible. That if he sees real slowing in the U.S. economy and the global economy and stuff, he's not going to go with that hard on the balance sheet reductions known as quantitative tightening, i.e. sucking out money from the U.S. economy instead of pushing money into the U.S. economy that we did for many, many years after the financial crisis that was very heavily criticized by all parties. Right? Remember quantitative easing? So he explained it cleanly. Markets loved it. 10:15 a.m. Bang! Markets go up another 300 points. And I even put it out there. Market positive. Anyone care to read? Buy the market. Ciao. So he's out of the way right now. Earnings, huge risk. Earnings warnings. It's starting this week. Hopefully don't want to get too many. We don't want to hear Boeing coming and telling us that they're not doing well because of the China trade war, which China is their biggest market. So, got to keep that in mind. All right. All right, guys. So let's go through the technicals. I hope made my points very clear. So your short-term chart can't get any more precise than this. I didn't draw this chart today to appease anybody. I drew it back on the 24th. Back from here. This is your Powell thing, right? The Powell crash on the 19th. And this is where we are. Look at every single point of engagement. You can't get any better than this. You really can't. And if you guys are not trading these charts and making some real decent money, I have nothing to say. Look at these levels. Look at these levels that I'm drawing, the resistance, the box here, the trading range, the extreme trading range, which we didn't get to, which I thought we might have gotten to. We didn't. And right now, futures were up 17. Now they're up 10.5. Why? Because technically speaking, Technically speaking, we hit the upper end of this bullish consolidation flag right there. Every time it hit the upper end, that's resistance. So now we could easily pull back. Let's say tomorrow morning, futures are up right now 10. Tomorrow morning, we actually open down 20 points here, which was the breakout range. 25, 22. Is that going to end the world? Technically, no. All it's doing is retesting the range breakout. And 20 points from here means we would be down 120 on the Dow. Am I going to freak out? No, I'm going to see the reaction at that level and then decide to buy or short, depending on whether it breaks below this bull flag consolidation, falls back into this range, or whether or not it's just a retest and then a jump up. If we break out of this range, we are going to get into this complete short, just the way we got into each of these ranges and absolutely decimated the dogmatic shorts. Well, that's the level that we would get into. This is not a difficult chart to read, ladies and gentlemen. All right. So sitting on your A, which you know what it means, on your behind, and doing nothing or not putting in any type of decent money to make some real money is a fatal strategic trading error if you are not if you're doing it when you're seeing chart breakouts of this magnitude. This is the short-term version. This includes people who day trade, people who have a more short-term horizon. This is as perfect as you can get. I even put nice colored arrows so you know what you're looking at. Next one. And this is your intermediate pattern completion at around 2588, which is roughly 40 points from where we are, which is translates into about a 240 Dow move, which we can get by Wednesday. Because Wednesday is always hump day. Remember, we reset on Wednesday if we have a sharp Monday or Friday, Monday and Tuesday. That's kind of standard procedure by now. Next chart is your, and I highlighted this so people can put this in context. This is your Fed Chairman quantitative tightening crash right there. And this is where the QT rally started. So if you're looking at pure technicals, which obviously are pretty much happen 90% of the time, but these levels are reached. But along the way, there's volatility, right? And that's the one that screws up 99.9% of retail emotional traders and undisciplined price chasing retail traders, which many of our members still are, despite the fact that they consistently see each of these levels touched and the upper levels retested. And the lower levels retested and the upper levels touched. Despite all that, they are still bunkerized and just don't do anything. Or even if they do it, they're so scared all the time, they're taking money out too fast. So I can't change that. You know, behavioral habits are very tough to change. So anyway, so bottom line is, if somebody believed in pure technicals, and along the way there's going to be volatility, intraday volatility, there's no question about it. By now, everyone has accepted that. I hope so. We are looking at pattern completion at 2590, which is roughly around 2600 on the S&P 500. There's no magic to it. I said we're going to have an ascending triangle while all this was happening, which we did a couple of intraday shorts, but mostly stayed long. And look what happened. We broke out of the ascending triangle with a bull flag formation in place as we see it now. This is your ascending triangle, this big, beautiful, that pink line. I hope some of you know what a triangle looks like. This is what a triangle looks like. This is an ascending triangle. This is an equilateral triangle. I don't want to give geometry lessons to people. This is a descending triangle. Right there. Descending triangle, equilateral triangle, ascending triangle. This is an ascending triangle. I'm kind of enhancing the word. Ascending triangle, okay? And look what happened. It broke out. And this is where we are right now in real time with futures up 10 1/4. So even if this was going to happen. The Stows kept on telling us it was going to happen. Other indicators, the VIX was telling us it was going to happen. And it happened. An ascending triangle breakout, which is, this one is from the 19th, from December 19th. Despite all the intense volatility, is a very strong indication that the markets want to go short term higher. That means your account can go up 100, 200%. I repeat, your small trading account or part of your trading capital that you're trading with can be up 100 to 200% throughout this move. Now, if some of you have done that, certainly text me. Certainly DM me on Twitter. Many of you do tell me, many of you who are actually learning how to trade the charts, including somebody who's here, I'm very proud of, who wasn't a technical genius to start with, picking up things fast, moving along with it, finessing their practices as they move along, because 1 + 1 doesn't equal 2 in trading. We all know that. So if any of you haven't done, let's say 40%, increased your account value by 40%, if you haven't increased your account value by 60% or even 100% throughout the move since December 24th, I offer you my complete time and attention and offer you a full private advanced coaching session or a group session on the house, because you're doing something so wrong. Mentally, I can't help you, because I'm not going to go into your brain and try to change you, But if you are, you want to talk about it, if you anything I can do to help explain things, position sizing, stuff like that, feel free to reach out to me. I leave that offer open on the table. If you think throughout this whole thing, if you did not grow your account 30, 40, 50, 60, 100+% on the part of your trading capital that you're working with, then you are doing something so wrong, it's not even funny. And my offer is open. I will work with you. I do not have time to work with somebody one-to-one, but I will do a group session, or if you want to talk a little bit directly on a one-to-one basis, I'm more than open to help you guys out. End of story. So, so this is where we are right now. Lots of these levels are going to be tested. We could pull back a little bit. We could retest the breakout of this ascending triangle, which is standard procedure, and it might happen overnight. What changes the whole pattern is, as you know by now, is if we completely break below this very powerful support, which was very powerful resistance before, right? Which is the 50 Fib, or what we call the 50% Fibonacci retracement, right there. Taking into account the Christmas Eve massacre and the spike that we got right after the Fed meeting, before he made the comment about being on autopilot with the balance sheet reduction. That was the spike. So the 50% retracement level, if we go below that, and of course that's quite a bit long way off, but if we start breaking each of these lines that I put through, which will act as support for now, then obviously things are getting really hairy. Now it's very possible that it is possible we get one bad headline out of China, we'll move down real fast and retest this 50% and lose 600-700 points real fast. Okay, but this level is a very powerful level, the 50 Fib. This dotted line here. As long as this holds, we're good to go. We're good to go. So that's your swing chart. That's 1 hour. The next one I'm going to show you, which I've repeatedly showed, not the first time you guys are seeing this, is the daily. So this is the daily chart going back to this nice fat thumb, which was the beginning of 2018. You've seen this chart hundreds of times, not hundreds of times, but so many times, because it, kept on showing that. So the breakdown level was for 2000 and the breakdown level for 2018 was right here, around 2530, right there, right? These two fat hammer reversals, which created a significant bottom. Then it tried to come back and retest that back on April 2nd, and then we went higher. Lots of volatility, but much more minimal volatility, but we kept on climbing higher. The lines, the 34 and the 50, kept on moving higher, and then everything broke on October 10th. So saying all that, if you look to see where we are right now, this was the break-even level for 2018. That's 2672. So that's 100, and that is 100. Where are we right now? 2540. So 2672. And remember, these are not numbers, just numbers. These are numbers which can affect your financial health, your P&L. Because if you're an options trader and you don't get numbers, then you shouldn't be an options trader. You shouldn't be a trader at all. You shouldn't be an investor at all. What is investing? It's about numbers. Buy a stock at 10. If it goes out of 15, you made 50%. So if you don't get these S&P numbers and these E-mini numbers and stuff, please do not be a trader. Don't. Do yourself a favor. I'm not going to die if you leave. So we're at 2540. So we are, yeah. So that's 132 points between 132 points from the break-even level. That was the upper Bollinger. That's the current upper Bollinger. And where we are right now, being futures up 8.5 right now, we've given back from 17, we're up 8.5. No big deal. So 132 points times 7, that's what I normally take for a conversion. So that's a 924-point move on the Dow Jones Industrial Average, just to reach the break-even level for 2018, which was last year. That's 924 points, almost 1,000 points from where we are right now. Can we get there? We sure can. But along the way, there's lots of levels we have to cross. We have to, first of all, cross these lines, first of all, are still sloping down, which is fine, because by the time these lines slope up, we're going to be well into this zone, well into that 800-900 point higher on the Dow. Remember, this is a daily chart. It takes a lot of power. Remember, these lines didn't fully cross down till multiple days of hammering in the market. So the lines won't cross up till we get multiple days of green candles showing that the rally is moving. By the time that the lines are going to turn, in my opinion, we'll probably get severely overbought and get ready for another 400, 500, 600 point drop or more. It's just the way things work. Because by that time, we'll be severely overbought. By now, I don't want to go into stochastics too much, because by now you guys should know it. When stows get really overbought, they can do two things. One, they can move sideways a bit before they reset. They'll always reset. Or they can just hit it and reset, like it did. Hit it, reset. Hit it, reset. Right? Or they can move sideways. Sideways are multi-day type of rallies. Sideways. Stows moving sideways. Multi-day rallies. Remember, each candle is a daily, right? Multi-day rallies, one after another. What does a retail investor do? Do they buy these things? Nope. They say, oh my God, I missed it again. Things are too high. It's going to crash. They're not looking at the internals. They're not looking to see that the stochastics are staying overbought, which is a sign of real strength. So they maybe by this level, they take a little bit of profit here and they let all of this go. Because no, it's mentally like, oh, it's too high. Amazon just went up another 30 points. I can't buy that. It's garbage stuff. Start thinking technicals, okay? For God's sake. Get rid of these old, bad, horrible habits that have done nothing for any of you over the years. Has it? I don't think so. Don't get swayed by just prices. Prices can go a lot higher. Look at the stocks that are up 100 plus points, like Amazon and Priceline. We haven't been trading Booking.com lately. I've traded a little bit on the side, but I haven't put it out as an alert. Look at Tesla's. Look at Netflix. Look at these big movers. They're up a lot, and they can still go up a lot because they fell a lot. But you have to follow the technicals. So the bottom line is we don't know at this point, and this is all dependent on how the China trade deal talks keep working. Another piece of great news, which I think was fantastic on the part of President Trump, he's going to meet the Chinese vice premier. Forget his name. I put it out there. I saw that on the South China Morning Post because I monitored that. He's going to meet him on the sidelines for a major summit, January 22nd to 25th. Great. You think he would say he was going to meet him if he didn't think that these initial talks, high-level talks that are starting on Monday are going to go well? I don't think so. There's too much at stake. There's too much at stake for us. There's a lot at stake for China. Our markets for a while ignored the trade war with China. Now they're not. I don't care what political affiliation you're in. You start hurting U.S. business because they can't sell into countries like China, especially big companies. We're going to falter hard. I don't give a crap what any of you think, honestly. All right? And if U.S. business is faltering, that's my biggest allegiance. U.S. business, because I'm a capitalist. Just remember that. I'm not asking you to change your mind about what I say. I don't give a hoot. So I think the Trump administration knows that very well. They're all business people. President Trump is a business guy who's done extensive business with China. Still does. The Trump organization has huge projects that they're working with some Chinese investors. So it doesn't want all the political back and forth that he gives and the tweets. Sometimes they're so asininely stupid, it's not even funny. But that's his style. I'm a New Yorker. I should know. I say stupid things too. So bottom line is that he knows. And he's doing the right thing, in my opinion. So saying all that, we are getting overbought. Once we get overbought, we don't know if the Chinese talks will go well. This Brexit stuff is somewhat moderated, right? And we don't get too many earnings warning. We are going to basically, and I've said this before, it's happened when in February I said this, and it happened. We're going to move sideways. It's going to stay above the 80 level. That means you got to stay long. That means the market will go back and retest this 2720 major downtrend line. Initially, the market has levels to conquer. 2570. This dotted line is a 34-day moving average. Here's your 50-day moving average. I have arrows here. So each of these levels will get tested. All we did on Friday was test a 20-day moving average on the S&P 500. And I'll show that on one of my charts. I think I already showed that. Remember, everything that I'm explaining here, I say it in concise form with my comments and stuff, and I'm explaining this fully now to help all my members. But I do that directly on my real-time Twitter feed. My real-time Twitter feed is so elaborate, so well explained, and written in simple English in technical terms that they don't even need to listen to my stupid voice on a Sunday evening. You guys can just go through that and you'll have a great idea what the markets are expected to do and what can happen. So I just want to remind people on that. But I'm sure some of you love hearing from me, so that's why, listen to my webinars. But whichever the case, these are the levels. So this move here between 2570 and 2633 is a very critical zone because that's retesting the 50-day moving average and the 34-day moving average. We are getting overbought. Once we get overbought, we don't know if things don't work out that well with China, we're going to reset real fast. What does a reset mean? We're going to hit these levels and we're just going to boom. We're going to be down 700 points. It's not going to kill the market because then it's going to create a large cup and handle, a V shape. Remember, cup can be a V too, a V and a handle, and that will be the handle. And then it'll try to break out over the handle. But we don't want daily resets. Daily resets can happen within 2 or 3 days, like the crash that happened. And then what happened? We move sideways at the bottom. So if we are entering a bullish phase because of all these great things that the Trump team's doing with the Chinese and other stuff going on, and the government must reopen. One with the other, they got to hammer it out. Okay? So, because when the tax refunds, I repeat, don't get to the pocket, it's going to hurt the GOP in a bad way. All right? Because people will remember that they didn't give in. The Dems are being hardcore nuts on not giving this couple of extra $1 billion, for border security and the wall and stuff. The wall's just a name for border security. That's what it is, right? So bottom line is, it's going to hurt the Republicans and it's going to hurt the Dems. So bottom line is that if that happens, then we're going to have a quick reset. Otherwise, we will move sideways. And if we move sideways, you're going to see markets basically just print higher and higher prices. Most we can ever get to is 2840. That's a lot. That's a bunch of 1,000 points from where we are. That's 2,000 plus points. That's 2,300 points in the Dow from where we are. Because that would be, from a technical standpoint, a large pattern completion. But it's not going to happen right away. First, we're going to try to get to the bottom of this range that the market was trading in, which was 2633. Once it hits that, there's going to be a bunch of selling. That also happens to be the 50-day moving average. Now, if you don't quite understand the dynamics of these things, you'll never know how to manage your trades. You'll always sell early for pennies, or you'll never get into it and never make any money. Both things are horrible. What you don't make is what you lose. Traders need to start thinking like that. Okay, next move. Next chart. The next chart is the weekly. Now, the weekly is for serious sin traders who are like, you know what, I don't want to deal with the intraday garbage and stuff. I want to look at the swing trades that Frank is putting through, Clue trading, and I want to keep an eye on things as it goes. Remember, the stocks which are most relevant to the markets on the industrial side are the ones that we already, and we'll talk about that on the Wednesday session, categorize the stocks that we trade. We trade the high beta momentum stocks, which are the FANG stocks and all that stuff. We trade these individual specialty stocks, which are the food stocks and such, and some biotechs. Then we trade the industrial stocks, which is directly correlated with the markets, which are the Boeing, the Deeres, the United Technologies, and stuff like that, right? Then we play the Chinese group, which is primarily traded through Baidu and Alibaba, NetEase. And then we play these secondary tech stocks, which are the power movers, which most of the time is not really talked about, the Squares, the Rokus, the Twilios. Then we have the retailers that we trade, which is Ulta. These are the bunch of stocks we trade. So we'll talk about that on the Wednesday session. Ulta, Nike, those are the ones that we trade, right? Sometimes Target, sometimes Walmart. And then we have our long-term swings and sometimes short-term big $13, $15, $20 movers like the drug stocks like Tilray and Bev and stuff. And Bev will always have some put away. Banks, we trade Goldman Sachs primarily and Bank of America, JP Morgan. Okay. Let's move on. So the weekly chart is the one for people who basically just want to say, okay, I want to put my money in there and I'm going to leave it in there and as long as this chart doesn't change. So overall, the weekly is looking pretty damn good, guys, ladies and gentlemen. If you look at the stochastics here, the stows need to turn. And it was great to see that we're printing a third candle right now. Futures are only up 6 right now. Third candle right now here. So basically, this is still looking good. We have crossed over into the level where we are, which is going over the lows for 2018. That's where we are right now. Right there. Live. Futures up 6.5. What we would like to see on a technical basis is, and I'm starting to see that, and some of you might see that because the more you look at charts, more you notice things. The histograms are shrinking. The histograms need to keep on shrinking. Remember, intraday volatility is a given. 200, 300 point down, 500 down. Prime example was Thursday. Market, they just slashed it away, down 660, 700. Yet the internals never buckled. Now, if you had half the technical brain, you could have bought some stuff and then enjoyed the 800 plus point rally or the 300 point gap open on Friday morning. Only if you follow the internals. Simple, huh? Yeah, it is simple. What's difficult is your brain. These charts are not difficult. Volatility is a pain in the butt, but I will say, and I was thinking about it this weekend, is volatility is allowing us to buy prices we would never imagine. Ever thought of it like that? Amazon down 140 points on a day and people don't buy it. Like, what the heck is going on? Amazon's down 400 points from its top, 500 points from its top. It is, right? Yeah, almost. And people don't want to touch it. Yet I'm giving options on Amazon, which are $3, and you can sell them at 10. You can trade Amazon as an active trader. You can trade Amazon during the day. So internals. So what we need to see is these histograms shrinking. They are shrinking. You can see that. We like to see the stochastic starting to cross over higher, and this is basically a falling wedge. It did, so that's a plus. So in between, remember, this is a weekly chart, so it's not going to. We would like to see on the long side. We would like to see if this is a continuation of the reflex bounce, right? We'll call it a dead cat bounce. I don't like saying dead cat bounce. You know what? We don't like dead cats. I got 3 beautiful cats among all our dogs, right? Including Polo. Poor Polo passed away. Can't believe that crap. Anyway, and we're already adopting another one, so our minds are less saddened. How about that? So bottom line is that we like to see green candles. That's what we'd like to see. If they start to break down, then we are going to do another retest. And those retests are going to be those sharp 600-700 point drops. But this is not a trading chart. This is a swing trading chart. This is a weekly chart. So weekly charts overall, without overanalyzing it too much, are starting to look okay. The stochastics, being one of the finest indicators, are telling us that the stows want to go higher, at least towards 50. Once it crosses over 50, you get that big move higher into the 2700 level. I'm more concerned about whether the market goes to 2600, as I showed you on the short-term charts. Once it crosses over, it's a multi-day rally. That's just the way it works, because stows crossing over means they're going to go positive. That's just the way things happen. Now, this goes back to 2016, so it encompasses a lot of years. Now, show you one other thing that I was thinking of, that if things work out, overall, nothing is ever going to get fixed. China's still got to fix a lot of the cheating stuff that they do, and the patent infringement and all that stuff. And we could take it a little bit easy to work with them on a diplomatic basis instead of calling them names every 2 days, right? Remember, they're a powerful nation. They're a superpower. You don't go around calling names. So saying all that, it's if we are basically right now entering what would have happened before the the huge sell-off because of the Powell comment. Remember, the market's more scared about what the Fed is going to do than what happens on the Chinese side and stuff, believe me. So now they're relaxing a bit. They're breathing like, okay, Mr. Powell, we understand you. We already understood it, Clueless A trading members, and us, we understood it because I explained all that to you guys at the time that it happened. But the market still took over in a state of panic, which we couldn't escape. So we did some short-term intraday trades, and we did some fantastic long trades, but overall, the market was down. So that's yesterday's story. Then this happened. So at this point, if you want to look at it from a really bullish standpoint, which I am not looking at it from a completely bullish standpoint, but I am showing you that this is a possibility, because nobody can think what can go right, because everybody's a USA hater. Everybody wants the US markets to be down 10,000 points. Everybody wants the United States of America, and I'm talking about Americans, people among us, our traders, who are consistently dogmatically bearish in the media, always wanting the U.S. to, and these are big shot names on Wall Street too, always wanted the U.S. to be on their knees. Oh, we should fall 10,000 points, blah, 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 blah. Everything is overvalued. What they're basically saying, that we should be a completely insecure nation, weak on our knees, so the rest of the world can basically laugh at us and take advantage of our misery. That's basically what people are saying when they say they want the U.S. markets down another 40%. That's really what they're saying. And this is American citizens, American so-called professionals. That includes some of you too, who are consistently bearish. So think about it yourself. You want to raise a flag and make America strong, great again, and strong again, yet at the same time, back of your head, You always think the markets are going to go down. How do you match those two things in your head? Think about that for a minute, okay? It's called alternative thinking. If you want America to be great, you need our financial markets to be great. So you don't always keep on thinking that the markets are going to be down now 30%. Great companies are going to be slaughtered. A lot of this had to do with a macro hedge fund liquidation, not a recession. Look at the job numbers on Friday. So if you want to be a real patriot, in my opinion, and you think, you really believe in America, then believe in the U.S. financial markets and get involved. Okay, I said my piece. So saying all that, on a bullish level, this is what was supposed to happen, a W formation, except this happened. But this was only 1 week, which changed the minds of so many people. Like, oh my God, we're just going to go into a deep depression in 2019. No, we're not. Are we going to have corrections? Absolutely. So bottom line is that there is a good possibility, I don't know if a good possibility or not, is whether or not this is going to be a W formation. And if that's the case, there's a lot more upside left. We already broke the downside. We tested it. I showed you where we're going to go. And we went there, which was the 2300 level. This chart was drawn weeks ago. So this damage has been recovered. And we can vacillate a little bit around here because we are trying to enter this broad trading range here. And that's clear as day for anyone who can read a simple chart right there. So once you're getting into it, you're going to see some vacillation. But once you're into it, there's a pretty good shot that you're going to at least get up towards the 2700. And over a period of time, that includes month or 2 months, 3 months, we could get up and test 2800. Don't know if we're going to test 2900, but 2800 and change. And by that time, the weekly will be severely overbought. Now, here is another example where the weekly stochastics went overbought and stayed overbought. And we had a multi-week rally, which we traded on a staggered basis, which many of you did nothing with. It's a fact. Next chart is the monthly. Now, the monthly is really one which excites me, but I learned to contain my excitement because of the crazy structured volatility programs that are prevalent in the market. In the older days, when volatility was not this enhanced, you could trade this chart, buy something a couple of months out, and just sit there. Unfortunately, because of the heavy, random, sudden flash crashes and the type of volatility ranges we are seeing, we cannot completely rely on the monthly chart anymore. But we can take a look at it. So let's take a look at it, guys. All right. So on the monthly chart, keeping it real simple, generally speaking, in 2011, these were all big recession scares and quantitative easing scares and America's falling apart and Brexit, the garbage, and all that stuff, and Trump winning, like the market's just going to go to hell in the handbasket, all that stuff, right? Doom and gloom sayers all over, hardcore ones, not just a little bit. Not like saying, okay, we're going to have a nice 5% correction and we move from there. No, these guys are like, oh, forget it. They're all out in full force right now. You see them on TV. And they've totally messed around with your heads, whether you like it or not. All right. And the volatility doesn't help either, especially the crazy volatility, the wide range volatility. It's all messed with everyone's heads. It's messed with my head, but I force myself to stay disciplined. And that's why I consistently move along. But with many of you, it's totally messed with your head. And you are short-term damaged. So I'm trying to repair that damage on your brain. Because having a technical discipline is the hardest thing you will ever master. 99.9% of traders have no technical discipline. They're weak. There might be great people in their business. There might be great fathers, mothers, all kind, uncles. But when it comes to trading, they are just nothing. So that's up to you to fix, not me. So I'm just trying to help. So back in 2011, back in 2015, back in 2018 here, These are the levels I'm watching. I've said this before, I'm not going into too much on the last thing. Do I think we're going to get down to that level of minus 0.13 like we did in 2009? I don't think so. Now, this might happen only if we completely blow up with the Chinese, or the whole range of tariffs go into play, the name calling and hardcore and US businesses like buckling. Yeah, we'll get there. That means the market is going to come and retest 2,300 and change. That is roughly another 2,500 to 3,000 points lower. That'll happen. But I don't think that is politically not expedient for President Trump. And I certainly think he wants that. It's not going to damage. It's going to damage his re-election possibilities in a big way. All right? And he's much smarter than that. That's your long-term uptrend line. But now that you know the downside, the bottom line is that this is where we are. So this little candle that's developing on a monthly basis should get up to that 2,700 level, which was the 2018 break-even level. Right there. I even drew that line for you guys. Once we are now, what we are trying to do here, and let me enhance this, is we need to start to see, and this is for real swing traders, right? I'm not even a real swing trader, to be honest with you, because I like to make money on a daily basis. I have my quota. I don't make money on a daily basis, but for the week, I can say, okay, on average, I did this much every day in between my loss and gains. So we are more short-term orientated with the picture on the long-term eye. But if somebody wants to put in some long-term money, they need to see the stochastic cross higher. And as long as it's crossing, it doesn't matter if the market's down 400 points for the week. That means it still wants to go higher. It's really as simple as that. Sometimes it's got a V-shaped move, and then you get a quick 2-month correction. Remember, this is a monthly, so it's a 2-month correction, but it still meant that the market wanted to go higher. So you buy the tactical dips. Doesn't mean you close your eyes and said, okay, I'm down 70%, I'm just going to stick to it. No, it simply means that you buy the tactical dips as long as the stows continue to move higher. So first of all, we're starting to see that turn. This is very important. What we would like to see from a pure technical standpoint, candlestick dynamics, we would like to see an expansion of this candle. Because right now, we have a small tail. We'd like to see a tail like this. This was the big move that happened before we pulled back again. The lower Bollinger's was retested, and it is still out there with a retest only if the stochastics start to turn down. So that's it. I'm going to be watching this very carefully, showing it and sharing it with all my members, all of you. If we start to see an expansion of this candle, that means on the monthly basis, the market wants to go higher. Now, how far higher can it go? Well, I've shown it in many different ways, right, where we can go. One of the simplest ways to look at this here is there's a red line here. See this red line? So what is that red line? That's your mid-Bollinger median. Let me make it bigger. There we go. Bingo. That median is around, that's a mid-Bollinger. Once you cross over the mid-Bollinger, frigging shorts are, they're already getting scared. But once you cross over the mid-Bollinger, the big George Soros type of long-term short positions that they keep on laying on our markets, that's what they always do. They always try to hurt the U.S. financial markets, those guys. There's a whole bunch of them. They scramble. They're like, uh-oh, now we're out. Can't take the pain anymore. So that mid-Bollinger is around 2655. Not too far away. Roughly 100 points away. Another 600 points. Now, here's another thing that you guys need to keep in mind. And this is something that keeps me bullish overall. Other than the fact that I believe that the U.S. financial markets, we are the best. The United States is the best. I never, ever want the United States, the U.S. financial markets to crumble to a degree which makes us weak. Do you think our military just makes us strong? We are the finest military in the world. So do some other countries, all right? But it's our financial markets. Money talks and shit walks, guys. All right? So you could have the strongest military in the world and no money in your pocket. Trust me, they're going to do it good for anybody. First, we can't even fund defense if that happens. So bottom line is that through all this calamity, and this goes back all the way to 2011, all that stuff, does anyone see that this line here, which is the mid-Bollinger, that it never really collapsed? That it never really went like this? I think, huh? Look at this candle. Horrific, right? When you look at the overall picture. But look at the median Bollinger, the mid Bollinger. The mid Bollinger didn't even, like, you look at the mid Bollinger, it's still climbing higher. It's telling us something, telling you that a lot of it was manufactured selling, a lot of it was low volume selling, a lot of it was just, there's a lot of things that happen. But the mid Bollinger, technicals don't lie. We can get scared, we can do stupid things. Traders lie. They lie to their brains lie to them. But look at the technicals. The technicals are telling you that it still wants to go higher. Now, we went from a standard deviation point. I don't want to get into too much. This is your median line, right? This is your mid Bollinger. We moved away from the mid Bollinger starting in July, before the elections. 1 second, not before the elections. November, right after. This is good old Donald winning the elections, right? So bottom line is we went parabolic. So the distance travel from the mid Bollinger up towards these candles, this is long-term picture, so you keep an eye on the longer-term picture while you trade short to intermediate term, is we moved way away from the mid Bollinger. So the standard deviation away from the highway, which is the mid Bollinger, was way too high for the market to sustain itself. In other words, valuations went a little overboard, right? That's when we had a lot of traders participating, chat rooms very full. My chat rooms like dead empty, which is fine with me because I'm focusing on actually gives me a heck of a lot more time to write more important things that people who are trading my alerts off my real-time charts can make more money. But just from a behavioral standpoint, this is when silence dictates. It's just like whoosh, from like, yeah, kaboom, blah, 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 to shoop, pin drop. Nobody's there other than 1 or 2 members coming in saying hello, which is perfect. You want that. Because that simply means cheaper prices, fear levels extremely elevated. Not anyone wants to hold anything for more than 2 hours. Perfect setups. So from a technical standpoint, the way you describe it is that we went way overboard with the excitement overall, which actually didn't really happen because nobody was really super excited, but generally they were. At least they were like expressing it in the terms of what they were saying, but not putting in the money what they were saying, even on this type of move. Institutions were, hedge funds were, the fast traders were. So bottom line is we moved away a lot away from the median line, which caused a massive standard deviation extension higher. We got severely overbought. Then we got severely oversold. If you look quickly, the distance traveled between the median line to where we were is the same distance traveled overall from where we went to, which was the lower Bollinger. So the excesses, at least the technical excesses of the market, were wiped out within a month. Within 1 month, we went straight lower. Here's your midline. Here was the technical excessive valuations. Here's your technical excessive devaluation right here, right there. So we're going to get back to the median line. It's going to happen. Now, if we get above that and the crossover starts to happen in any substantial fashion, then we are going to cross over into this channel here, which means the downtrend line. Remember, this is the downtrend line, and we cross over 2730, 2740 on the S&P 500. You're going to make a beeline for 2900, technically speaking, over a period of time. Because by that time, the market will basically, that's just the way it works. So for now, we still got some nice room to move. And barring any major catastrophe on the trade front and all that such, we're good to go. We're good to go. So take advantage of tactical sell-offs based on the way I show it. And the volatility certainly will get short-term. On the 15-minute, on the 1 hour, the VIX will get oversold, overbought, all kinds of good stuff. So you'll get those quick 100-point pullbacks, 200-point pullbacks. Don't freak out. Those are buying opportunities. As long as the weekly and the daily, weekly, and the monthly trends are moving higher. And really, it's really as simple as that, guys. Now, certain stocks that I showcase, which I can't tell you which stocks are going to have blowout earnings, but you know my choices. I show them out all the time. I like the Rokus, I like the Teslas, I like the Netflixes, which deliver nice fat profits. And anybody who's not making them, I don't know what to say. I like the Squares. So I pick and choose a little bit. There's so many stocks out there, just look at it. But it's not random. If you want to play the clean market, just play the SPYs, play the IWMs, play the Qs, play the DIAs. So you don't have to worry about individual stock risk. Then you can really trade the charts based on those levels. And each of those indices I have shown repeatedly, right? Okay. Last quick thing here. I showed you this chart. Okay, so this is beautiful. This is a quad chart. Here's your 34. Here's your 50. Here's your downtrend line showing around 26.30. Along the way, we have, stoppages, 25.53, all that stuff. So take a good look at this chart every time I'm showing it. Subscribe to Quad, call them up, get the information from me. I have no affiliation. I make no money off Quad. I love giving them referrals. This is one of the most advanced trading charts you can use, both on the short term and both on the dailies. I primarily use the 1 hour and the daily for Quad. So if you want to move on to the next level of trading, then certainly use Quad. Next one is this one I want to show you guys. So here we are with the 533. This is somewhat exciting. Is to see that and remember, this was the big Apple sell-off, right? The big one. Candle-wise, it didn't look too good. But if you look at the internals, which is the MACDs that are highlighted here on the this is the swing 533 chart. The MACD kept on saying MACDs kept on shrinking. So despite this big move and then this handle created, the MACD kept on telling me on the swing basis, this is the market directional bias chart. This blows away anything you can look at, what the big traders are doing, what block trades are going through, blah, 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 blah. Those are also important, but they mean nothing because you don't know what they're doing. Are they hedging? Are they buying straight out? What they're doing? Oh, that ad on TV. I know what dog pools are doing. If you did that, you'd be making 300% a year. Like complete garbage. That's like snake oil salesman. That's serious. Because they know people are going to suck into it and pay them, $100, $150 just to get a piece of information they have no freaking idea how to use. So just look at the charts. So the stores were shrinking, and now we have gone positive. And that's exciting because once you go positive, generally speaking, you tend to build up. This is statistical S curve, right? So you tend to build up towards at least 1, 2, 3, 4, couple of days of these histograms building up. Now, volatility is very intense. There's all these other factors, China and stuff, Brexit and government shutdown. So these things are a little bit more harder to read. But generally speaking, when MACD goes positive, it generally tends to stay positive and build up for at least a couple of days. So if that's the case, we are getting overbought. And once this crosses over 90, I would say we are good towards, we are going to, like till the 11th, we should be cruising fine. Then next week is around the 15th of the month. So till this week should be okay. Then next week, we get into turbulence, right? Mid-month, we already know that. So by that time, we'll be overbought. We'll probably get a 300-400 point pullback. We need to basically play small, do some intraday short trades, and that's it. So this is at least telling me that that we will have a couple of days of MACD histogram expansion. If that's the case, then we are going to climb towards the levels that I just discussed extensively. We need to get overbought again. Now let's take a look at the daily. Now this is going to be interesting. I'm sorry, the weekly. I haven't seen this. So I'm seeing it for the first time with you guys. What's it doing? Bingo. Look, for the first time in a long time, and this is the first time I'm seeing with you guys, that's what we do here. We share with everybody. We are starting to see the actual histogram shrinking. Like I said, if we don't have major earnings warnings, and the analysts are so frigging pessimist, not just some of you guys like super pessimist, super scared all the time now, because of what happened in the markets. Wall Street analysts have some of the lowest estimates for companies because they're cut estimates right, left, and center. Nobody's really bullish at all. So that sets a platform where these companies can come in with slightly better numbers, beat those numbers, and they'll be up a gazillion points. Okay, so based on that, this is what we're seeing. I'm going to go back a little bit more. Go back 1 year, 4 months. And let's say you knew nothing about the stock market. Trade these things. I was talking to at our friend's birthday party. This other guy, he's a tech guy. I showed him one of my charts. He goes, "Those are really cool." I said, "Yeah, they make money too. Isn't that nice?" You know. And he's got some big fund manager who's doing nothing for him. And and he's got a lot of money. So this guy goes, "Explain to me what these candles mean." So I just gave him like a 3-minute rundown, and he goes, "That's really cool." I said, you don't need to know anything about the market. This guy's a tech guy. He's got a patent on something. He's like freaking loaded, right? Older guy. But he can't understand the stock markets for the shit of it. Excuse me. And that's what the story of my clients back from the old days. And I got tired of being a babysitter to them, honestly. So bottom line is that if you knew nothing about the market and you looked at these candles, and this is it weekly, and these candles on the histogram, these bars started to shrink, all it told you is the market will go higher. You'll still get intraday volatility. That's going to, that's standard. But as long as these histograms are shrinking, they have not been this oversold in God knows how long. Since 2008. Believe me. So now we got the stochastic crossover, which we like a lot. We got this coming over. This is the pivot, which is approximately 25. What is the pivot here? Let me see. 2540, which is exactly where we are. So we cross over the pivot. You know what happens when you cross the pivot? It's like a little trampoline. You jump higher from that. When you break the pivot, you crash. When you cross over the pivot, you jump. The midline here is your 50-day moving average. That's around 27. We already know that stuff. The dotted line is the mid-Bollinger, which is 27.50. These are a lot of money in your pocket. So you can buy something. As long as this is starting to shrink, you can buy something a month or two out and leave it there. But first, we need to see the monthly that I showed you crossover. That's when you can leave it in there and say, I'm not looking at it. Or if it dips, I'm going to add a little bit more. So that's basically it. This doesn't get overbought till it goes into over 70. We're far from that, right? So we know that. So this is looking pretty good. I haven't seen this for the last couple of days. I'm liking what I see so far, and we at least we're going to about 2,600, which is right around the corner. That's another 500 points or so. Now I could be dead wrong. Things could totally fall apart. Donald starts tweeting like crazy in the middle of the night against Premier Xi. Then that's a different story. Those are unquantifiable risks. They're kind of quantifiable because we know he's done that before. But given the feeling that I'm getting right now with everything going on, I think he is going to stop himself from doing that. He does want to cut a deal with the Chinese, and the Chinese better step out of the table, which I think they are seriously doing. They've done a lot of things in tariffs cutting and stuff, by the way, which never get really reported in the market because everybody's worried about, what the Fed was doing. Now, Fed's out of the way. The Chinese have cut tariffs on cars and many, many things over the past 2 months, but you don't hear about that. So that's it, guys. I think I covered quite a lot of stuff. I am more than happy to answer any questions, but not tonight. I gotta run. And God bless you all. I hope that everything that I do makes some difference to your mental state as a trader, and hopefully that translates into monetary gain as a trader. I am not, I repeat, dogmatically bullish. I am overall bullish on a technical basis from the levels we are. I also want to stress the point, which I stressed many times today, that I do believe very strongly that people who consistently think that the U.S. financial markets should always be down, and many I don't know whether my members or not, but I know some of them were like that, are basically asking for the demise of the U.S. economic system, making us fall on our knees. And in that case, you're not a patriot, you're not American. I'm dead serious. Some people might find it offensive, but that's the way I look at it. On that note, have a great week. Let's make it happen. And my offer is open. Anybody who is not taking advantage of these massive moves in the market that is happening in individual stocks and the overall indices, reach out to me. I'll work with you guys as much as possible, and we'll go from there. Remember, we're in this boat together. Thank you all. See you tomorrow morning. God bless you.